this. No. Yeah, it's kind of. Well, okay, actually, hold on. Yeah, it's going like super fast. That shit is just running. Actually, I don't even know if I even have my man. My feed comes and goes. Like I sometimes I just forget to refresh it. I wish it would just refresh by itself, so I don't have to pay attention to it. But well, I think so. So just like Santiago says, I think they're going to get the aggressive bulls because everybody's being aggressive right now, and yeah, trap them short or trap them long. Of course, this thing's been loading headlines for what seems like forever. Uh, I know, bro. I know. I know. And I'm not a part of it. I'm supposed to be. That's not fair, man. It's not fair. It's not fair. Dude, it always starts off that way. It always, oh crap. Oh shit. 412, 412, 412. The orbs are in. 412. There goes the drop. Or at least there goes the the selling apparently. I'm about to say I know my sheet didn't break. Okay. So we have over 100,000 contracts added in the first 15 minutes. You know what that means. We already know that the breakout's happening. The CFTC data is telling us that the market was planning on doing this shit the whole time. 64% long, 36% short. 42,000 contracts net long. I was going to go along for the ride. I just knew that this wasn't going to be a sustained bearish move. We probably might hit all-time highs or surpass all-time highs. I wouldn't be surprised at that. and get rid of some of these lines, these trend lines, the ones that are that would be kind of impossible for price to really react to. All right, so I got these 3 trend lines right now that on the ES. My bad, go ahead. Mm-hmm. Well, it looks like the Bears are coming in at that range that I was looking at, 315 to 335. It looks like we are getting a little bearishness in this area, but obviously the overall trend is bullish. So I wouldn't uh yeah, I wouldn't take that trade because it'll be definitely a stressful short. You might become liquidity if you take this short. Says you're a liquidity. All right, we got 10 minutes to the fireworks. Damn, I should be a part of this, man. Damn, man. Ugh. At that range. I mean, this little if so when I saw the breakout of the trend line, uh if this thing would have tagged me, I would have been in at 398 because I had my limit attached to the 21. She probably missed me by like a couple of ticks. So I'm gonna probably start doing 6 ticks because the 3 ticks ain't working. Because honestly, I was going to get super aggressive and just put my limit above the high. I probably should have done that, but knowing exactly what well, I guess it don't matter. The milk has been spilled. I shouldn't be talking about what I shoulda, woulda, coulda did. It's what happened. And unfortunately, what happened is, I didn't get it. Okay, so that looks like a good area to, that lines up too. I'm looking at 464 on the ES for a potential rejection. Potentially. You got in at 275 long or short, K trader? Oh, you say you got in at, okay, yeah, that's a good, yeah, that was a good entry long. Yeah, that was a great entry long. Yeah, yeah, dude, you gotta be patient, bro. Dude, the move is gonna happen. You know it's gonna happen, bro. You know it's gonna happen. Hmm. On Wednesday. And you're looking at the MNQ 30-minute. All right, let's look at the 30-minute. All right, and you said on Wednesday. Hmm. Yeah, I see what you're talking about. Or I'm sorry. Which time frame again? You said 4:30 to when? Oh yeah. Okay. Yeah. Okay. Yeah. 8:30. Yeah. 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 This is the candle that he's talking about right here. This big drop candle. So we'll see. We'll see if I mean, well, they kind of already came back and double bottom retest. So that candle may be invalidated. They came back and cleared out that area of supply yesterday. I'm looking for 435, 455 though. Yeah. Mm-hmm. When in doubt, VWAP out. Let's see what happens. Let's see what happens. All right, man. ES, don't hurt my feelings here. All right. Hmm. Hmm. I know gold about to go crazy. Gold is about to go crazy. Am I all right, man. I'm gonna probably have to do 6 ticks, man, because that's getting kind of annoying. I'm gonna have to do 6 ticks on this. I can hear you now. 1, 2, 3. Yeah, I can hear you now. All right, here come the fireworks. 2 minutes. We got 2 minutes into the fireworks. This volatility is not going to be for the weak here. All right, 1 more minute. And I'm going to attach another limit just in case I get stopped out here to the 200 to back at this back at the trend line. I'm probably do 7 ticks from now on. See how that works out because I'm missing too many good moves like so we'll see. All right, 30 seconds. I mean, hopefully Powell ain't going to pull a Trump and be fashionably late. All right. Uh-huh. Yeah. Yeah.
No freaking way. No way it did that. Ah, I should... Yo, what is he even saying right now? Hold on. So he ain't even said nothing and they just pumped it up? Okay, okay.
On goals and monetary policy strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply.
I guess I could look on
Inflation had
Financial
moved
Juice.
much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point.
Downside risk,
Development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system.
I hate when
tighter immigration policy has led to an abrupt slowdown in labor force.
Like, hey, yeah, maybe I should put a limit at VWAP. Then mess hits VWAP to the T and pumps up a million bajillion points. Dang.
That shit only worked because you wasn't in it. That's, you know how that shit go.
Yeah. But I said it. I said it.
You said it, but you weren't in it, and that's all NASDAQ cares about. Now she wants you to be emotionally caught up. She's like, yeah, he'll make a mistake. Don't fall for it.
He'll chase.
He'll chase it.
Get the FOMO. He missed out on a banger trade. My goodness. That would have been
Why didn't you set the limit though?
I don't know. And I stepped away. Yeah, it's probably because I stepped away from the computer and I didn't want to I could have set a stop, but...
Well, let me ask you this. Why did you step away from the computer?
I had to use the bathroom.
You know what's crazy? Do you think you self-sabotage yourself? All of a sudden, before the move happened, you had to use the bathroom or you stepped away from the computer. And did it feel comfortable doing it? Like, did it empower you to step away from the computer?
No.
It's like it didn't want to see you win or nothing, yo.
No, it didn't. I actually wanted to at least react to that. But my goodness. Oh well. I missed this completely. Now I gotta figure something out.
With the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem.
Wow.
A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks.
That's crazy. Oh
Moreover,
my gosh.
tariff rates continue to evolve.
That's crazy.
Potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely.
Damn.
Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%.
Let me see if they raise the margins.
Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks.
He said may require adjusting policy stance.
Approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective.
That was like a short right there.
The changes we made in this review are a natural progression, grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. A statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic.
That would have been the greatest trade ever.
Included several features that
VWAP entry.
ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasize
the milk's been spilled.
You right. You right. I'm just.
Price stability and
you right.
I know. You know. You. Yeah. You're dwelling on it though. That's all that Nasdaq needs is that seed right there.
The seed's been planted.
Nasdaq apple seed. She planted a seed. Don't let it grow.
In particular, we said that following periods when inflation had been running persistently above 2%,
you know that pullback's going to come.
Monetary policy would likely need to achieve inflation moderately above 2% for some time.
Yeah, maybe even
in
a
the
dump.
Event, rather than low inflation in the ELB, the post-pandemic reopening brought.
But I hate taking shorts now.
40 years to economies around the world.
Dude, I wouldn't take a short, dude. I wouldn't take no short. Not today. Not today. The market is literally doing what we talked about during Sunday's stream. A big drop and a big pop, bro. This is probably going to like 700-800, if not new all-time highs. I would not short today. Let the aggressive bears become liquidity. Let them pull it back, buy it up, and let them become liquidity. I would not short this shit.
That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive.
You listening to Powell?
So, in my view.
Yeah, I'm listening to him right now. I'm trying to listen to the words that he's saying in between his words.
May now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statements focus on the
gold pushed up, so
communications about our response.
Everything pushed up. Gold, ES, Nasdaq, they all pushed. So
specific set of economic conditions.
What does that mean?
And as a result, we made several important changes to the consensus statement to reflect that insight. First,
let me reiterate.
The ELB was a defining
pimp named Slickback don't do shit for the homies.
We noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not.
Let me reiterate: a pimp named Slickback don't do shit for the homies.
Full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we retained a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out,
Do
The idea of an
man.
intentional,
Do
moderate inflation overshoot had proved irrelevant.
Homies
There was
over
nothing
hoes.
intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher, and limit the risk of deflation when the economy weakens.
He got the purple tie today?
Further, they allow monetary policy to support
yeah, he got the purple tie. Yeah, he do. Yeah.
Without compromising price stability.
Of course.
Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored.
Well, he did say they may have to change their policy. I did catch that.
It also means that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery
is this the
featured
pullback?
employment running for an extended period above
We'll see.
estimates of its sustainable level.
We will see, because at least the ES is rejecting off of a trend line.
In the absence of inflationary pressures, it might not be
So
necessary.
the ES, I don't know what that's supposed to mean. I don't know what that means.
Solely on uncertain real-time estimates.
The Nasdaq is rejecting from a previous area of support term resistance. I mean, we got the break of structure, and it looks like she's trying to reject from that area. So I don't know. But like I said, I wouldn't short this. I would just wait for the pullback.
Or to ignore labor market tightness. Accordingly,
previous area of support term resistance.
Instead, the revised document now states
why does this always happen on Powell days to me?
At times, above real assessments of maximum employment, without necessarily creating risks to price stability.
Yeah, I could have caught it.
Course,
I could have, would have, should have. Who
warranted
cares?
if
Move
tightness
on.
in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment
Look
that can be
for
achieved on a sustained basis in a context of price stability. This
around
focus on
430 or
performance in the
around
labor market
450,
underscores the
430. I
principle
mean, that's like 20
that
points. That's a
achieving
20-point
maximum
range. But
employment fosters
the
broad-based
previous day
economic
Orbs high
opportunities
is
and
at
benefits for all
430.
Americans.
430.
The high of the day is around
The feedback
490.
received at
So,
Fed
but
Listens events reinforced the
450
value
to
of a strong
430,
labor market for
maybe.
American households, employers,
Maybe.
and communities.
VWAP might
Fourth,
be the answer here as
consistent
well.
with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original.
You're right, Alfred. You are absolutely right about that.
Take into account the extent of departures.
You buy high and get stuck up there.
Time horizons over which each is projected to return to a level consistent with our
like, no, what are you doing?
Mandate.
Come back.
These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern.
I wonder if she comes back and tests 450.
In addition to these changes, there is a great deal of continuity with past statements.
450 probably be where people get in. It'll probably flush the 435,
and describes
30.
the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lag in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that
look at the 60K chart.
Employment is
yeah, that's right. Yeah. She don't lie.
Directly measurable and changes over time for
What
reasons
she doing?
unrelated to monetary policy. We also continue to view a longer run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the
Damn, Alfred.
pace. That frequency allows policymakers to reassess structural features of
Hold on, what?
practitioners.
11,000 in profit? Yo, congratulations, bro.
It is also consistent.
Oh, well, I was
Oh.
like, bro, what? I mean,
To wrap up,
today you could have
I wanna
made that.
thank President Schmidt.
You could have made
and
that
all of
today.
his great
Yeah.
Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity
Okay,
for
that should probably
Fed
be it.
leaders to hear ideas from leading economic thinkers.
Limit
and
at VWAP.
some of the challenges we face. The Kansas City Fed was very wise.
Let's
to
give this a
move
second
Gulf
try.
Here to this national park more than 40 years ago, and I am so proud to be
I
part
could
of
have
that tradition.
limited it right
Thank you very
here
much.
and caught all of that. Nah, you better take some questions. Still need this to keep going.
Oh, that's it?
Thank
That's
you very
it.
much. We'll move into
Let me turn that shit off.
presentations. So I want to allow a minute for all
Okay.
of the members
Well,
of the
okay.
press to go.
I guess that's it.
Yeah, that's it.
That's what the
Man.
market was held up for. A 23-minute Powell speech. 23 minutes. And then they cut the live stream off. Yo, that's crazy, yo.
Yeah, because don't nobody care about anybody else.
Well, it shot up from 75 to back to 91. So the market is still speculating that we will see a rate cut next meeting,
Nah, this fool
depending
better-
on data.
Yeah, this fool need to take some questions from the audience.
Prop firm
kidding?
traders love the questions. Money managers be like, "Oh shit, oh please don't ask a stupid question." I'm already full port. I'm full ported this already. Please. Prop firms traders love it. Money managers hate it.
They love this. Oh my goodness.
See how that
Homies
does.
over home. Do the homie.
Homies over hoes. Homies over hoes. Homies over hoes. Do the homie. Do the homie.
Accidentally logged into the wrong tab. Can't trade NQ. Regular NQ.
Talk about as soon as you place a trade and it's gone. And it's gone.
Stop him. Turn the mic off. They're asking questions.
Ask last questions. Accept my answers.
Will we be getting a rate
Accept
cut?
my answers. Well. Huh. Huh. So that's why people smoke cigarettes after having a good time. Huh. Ooh, what a thrill. What a fucking thrill.
So wait, how much of that did you catch? All I
Oh,
heard,
shit, dude.
I was heading back to my computer and all I heard was you laughing. This diabolical laugh. This is like a villain.
Yeah. I caught majority of it. I was too slow dude, it ran through my limit. I still had a target. Man, it ran through the target. It was still filled. So I think I got filled up at the top because it was still there.
The volatility like pushed it up.
It pushed right past my target. Didn't fill it or nothing. And the candle was just, I was trying to move my my last runner target a little bit higher. It filled. It was just too fast. I was like, damn.
You breaking circuit breakers, trying to break the market.
Whew. Yeah, that was fun and exhilarating. At first, I mean, I could say, dude, gambling is fun because of that. Because I thought I was prepared for a drop and a pop, but when I got filled and then it just popped, I was like, yeah, baby, yeah.
That must be diabolical. I'm like, damn it. Racing back to the computer. I missed it. And then to come to find out that it tapped VWAP perfectly. And I was like, man, maybe I should place a limit at VWAP. You can't go wrong with VWAP. And it tapped it perfectly. And it shot up 1,000,000 points. Oh my gosh. I might just be done for the day. No trades. Cause that's crazy.
Shit. That's probably the best decision that you can probably make today.
Well, I don't mean that, but
I know that. That's why I said it could be your best decision that you make today, but I already know it. The NASDAQ is a siren. Dude, as soon as you say, you know what, I missed the move, let me enjoy the rest of my day. And then the NASDAQ says, oh, he thinks he's going to enjoy the rest of his day? I've already planted the seeds. And then that seed is going to be like, hey, you missed that move. You remember that move you missed? Remember that? And then it's going to slow down time and shit. You think it's 2 o'clock in the afternoon and it's only 10? And it's like, shit. You got plenty of time. Come on. You got plenty of time. What about power hour?
Or then, before you realize it, it's like 2:50. Like, what? Where'd the time go? Like, what? We about to be done for the week. Oh my gosh. Wow. That's so crazy.
It's too high to buy, but too bullish to sell. I wouldn't jump in this aggressively. I would not jump in this aggressively. She will chop you. It ain't worth the heartache.
Yeah. He said I'm gonna be looking with tears in my eyes later. You might be right. I'm gonna be looking after markets close like, damn, what could have been?
That's why you don't go to the bathroom. That's why you don't go to the bathroom. You hold that shit. Like, no, I'm staying at these charts, damn it.
You said you hold it. Oh man. That's crazy. Yeah, this is wild. Honestly, though, I might be. I mean, we still got time in the market. We got plenty of time, but I have to see how things play out. Cause, like you said, too high to buy, and
too bullish to sell.
Yeah, you sell this, you out of your mind.
Yeah. Well, it missed my limits down here. Don't know why, but I guess it didn't want to see your boy Sherm win. That's it. That's what I'm gonna equate that to. Yeah, I'm looking at the 30-minute on the ES, man. It did tap into a previous area of resistance, which coincidentally is where that trend line kind of stops at right here.
Yeah. Wow.
Just wait for the pullback because you already know that the bulls is not going to be able to sustain this move higher. I mean, so the only thing that can happen here, either they're going to grind it higher, which is possible, but what's most likely to happen is they're going to chop it to the right and then they're going to drop it. And trading that pullback is the trade that you want to be a part of, to participate in. That's the trade. All right, so the ES ain't doing nothing. The NASDAQ ain't doing nothing. Just waiting for a pullback. It's like, NASDAQ, can I get a pullback? Can I get a pullback?
All right. Yeah, because this... Oh, man. Wait for the pullback, you say. It's still going.
Wait for the pullback. Yeah, that's how they generate liquidity. Everybody that missed this move is fiending right now, especially NASDAQ traders. You know that dopamine, that shit don't play. They're fiending right now. Those that didn't take the OR breakout, because that was definitely a decent OR breakout right there. And you can't sit there and say that it wasn't. The market gave you an opportunity to be profitable. Not you, but the entire market. That was a clean OR breakout right there. So in the NASDAQ's eyes, she was merciful today. She was merciful.
Oh, man. Investor Z, did you catch any of that?
Yeah, what's up, Investor Z?
No, come back. Come back to VWAP for me.
Thank you, please, please. Baby, please. The NQ responds to that because that's what gives her pleasure. NQ, please. Come back, please. She likes to see you grovel.
That she does.
Baby,
That she
please.
does. Dang, Bitcoin popped up 3K.
If we don't see a rejection here, if we don't see the rejection, you know what, man? I'm going to go in the sim because I want to test this out. If we don't see the rejection here, then this thing ain't going to reject. It's going to probably still grind up to the upside. Okay, we'll see. So look for like a re-entry around like 435, 400. 435, 400 is probably where if we see the pullback, that's probably where we'll get a bounce because at least on my chart, VWAP is slowly creeping up. And yeah, 435. Probably gonna be that level. I took a trade in the sim because I was fiending for a trade. I want to feel that rush. Normally, I think this trade would work. Well, this is what you would consider a break of structure retest, where the market, well, hold on. Let me be very clear first. I took this trade in the sim. I don't think this trade will work, but you know, I want to take a trade, damn it. So, you know, I took it in the sim. I want my drugs. I want to be very clear about that. I don't think this trade will work. But normally, under normal circumstances, yeah, this trade would probably work. But anyway, now that I got that disclaimer out of the way, I mean, you got this range right here. You got price pulling up higher, failing to take it above the range, failing, breaking it, which is a break of structure. It broke structure out of this range. It broke structure underneath this low, and it found support at a prior area range. And then it pulls right back into the range right here. And this is usually selling the retest, usually. And this should be an easy winner to the downside under normal circumstances. Okay, well, maybe under these circumstances too. Okay. All right, well, we'll see. We'll see if it follows through here. But there is no way in hell I'm short in the market today, because I'm not going to take a stressful short in an account. Actually,
Yeah, I don't know if it's gonna work. I think.
like I said, I would not take this. Well, I mean, shit, I'm not even taking this trade in any of my funded or evals accounts. I hop into the sim. Normally, this trade would work. You have a drop. This is actually an S plus setup. Like, it's super S plus. This is textbook. This is a break of structure into a. This is a break of structure and a two-legged pullback into resistance. That is textbook. This is the technical analysis they show you in the books. That's textbook. Normally that would work, but I doubt it would work today under these conditions today. I doubt it. Or yeah, I doubt it.
And Trump speaking too.
And Trump ain't gonna get outdone. He's like, hold up, Powell did what to my market? Powell did what?
He's like,
he pushed the market high. Oh hell no!
He said, I need to take credit for that. This is the Trump pump, baby, not the Powell pump.
This the Trump show. Like, what the fuck? Trump is like, nah, hell no. Set up a press conference. He said,
look what he said. He said, I will fire Fed's cook if she doesn't resign. Yo, it always has to be about Trump. He always has to make it about himself.
Of course. Of course. Gameway says his TP still at 669. Man, Gameway, you ain't about to add to it. You ain't about to add. You ain't adding. You ain't about to get heavy.
Don't make me go
use
heavy.
Reverse psychology on it. You ain't about to add. Add it then.
Yeah, I want to see the Muhammad level contracts, like 300.
Get heavy. Get your weight up.
Get heavy.
Damn, Gameway. Hold on. I think Gameway said this to me, so I was holding this in for the longest. Way to kill a joke, Gameway. Way to kill a joke, Gameway. Gameway said that shit to me a while back, talking about I killed the joke. Okay. Way to kill the joke, Gameway. I mean, you in a situation like this, adding up here, I mean, it will be a gamble for sure. But I mean, nobody wouldn't blame you for adding up here. Nobody. But this is a textbook short setup, so I think that's the reason why we're getting this resistance. But we're probably I mean, if the Bears fail to follow through here,
Tell me why this
all
BS
their
stock is over 450 now. Oh my gosh.
Who?
Open. I still
Open?
had alerts on my freaking trading view for that stock that did nothing when I was in it. And now it's over 450.
It's at 450. It's over. Dude, when did this happen?
My options would have hit.
Shit. Hold on. When did this happen? Hold on. When were you in them? Yeah, that shit popped up August
18th, I think.
Yeah, that shit popped up today.
Expiration. What was the 18th? Was that No, the 15th. 15th. So mine expired last week, and then now the week after, it wants to do this.
Yep, that's how you get the. That's how you generate liquidity for a stock. Get everybody hyped up, get them in on options or stocks, and then let them hold the bag for a while.
Yep.
Shit, honestly, let me look at. Oh, my bad. Go ahead. Let me look at AMC.
AMC.
Damn. Damn. Yeah, they keeping AMC under $2. Like, they ain't gonna let this shit pop back up. You know how long it took them to sell AMC when it got to the. Oh, hold on, AMC did not get to four. Hold on, when was AMC at $400? When did that happen? Yo, hold up, when did that happen? Hold on, AMC was at 400? No way.
I don't know. I don't remember seeing it that high.
What happened? Is this? No way. AMC did not get this high.
Maybe in the after hours or something. I don't know. I don't remember it getting that high. I remember.
Dude, it never passed $100. Oh shit. Was the conspiracy theorist right? Yo, I think the conspiracy theories were right because remember well, I don't know how deep you were in the AMC plays, but AMC was a stronghold when I used to sell options. I used to love AMC selling options. I made so much money off that. But when it started going down, I was like, premium's done. But they were saying that they saw dark pools of AMC trading at $400-$500, but on the regular price, it never really passed 72. I gotta look into this. I'm gonna look into that. Damn, gain weight is like that. It's like that, gain weight. It's like that.
Matter of fact, let me see how my crypto portfolio is doing. So I started a crypto portfolio, I think early July or maybe mid-July. So it ain't much, but
Again, when it says only 2 cons left, so he got a TP at 669 and 2469. Bro, well, why would you have why 2469? I feel that if we break back above 24K, dude, we're going at 24.1. Easily 24.1 if we break above 24K. Why stop there?
dang, this is wild.
Well, good thing I took that short in the sim. I knew the short wasn't going to work, guys. But that was a classic short setup right there. Classic short setup that I did not want to pass up. But I'm going to ask my AI assistant about this. When did AMC Yo, what? So it's saying AMC stock reached over $400 per share on June 2nd, 2021. No way. No, it did not. It says, but this price reflects the adjustment for the 10-to-1 reverse stock split that occurred later. Oh, wow. At the time, the actual trading high was 62. I thought it was 72, but whatever. But when adjusted for the reverse split, the historical data shows AMC selling and closing above $600. Wow. The conspiracy theories were right. And that's why nobody wanted to do that. How would you feel about that if you was an AMC shareholder and they did everything they could to dilute the stock and then they reverse split it, and then you come to find out, look at the charts, that this shit was over $600 right along with GameStop. Wow. Wow, that's crazy.
Yeah. I can't believe they're not bankrupt yet. Nobody goes to the movies anymore, really. It's
Yeah,
all
this shit's
streaming.
expensive, man.
Yeah. Is this the drop? Are we getting it? No. No. Yeah, I think I'm cooked today, and might have to come back. I might have to come back Tuesday because Mondays have just been terrible for me.
Mm-hmm.
Monday's been like all chop, and well, maybe we'll get some move after today, but yeah. $662. And what else?
So, hold on, guys.
700. All right. Here are the stats from my crypto portfolio. Started in July, so about a month. I'm up 4% unrealized in Solana, about 4.5%. And then in Ethereum, up 15%, 15.5 unrealized in that account. 2 separate accounts. And then up 5% in the second account in Solana and 18% in Ethereum. Unrealized.
My bad. So, Smith, what you're saying is that you're going to close down Tradeovate, TradingView, and all platforms where you can execute a trade and be done for the day?
Why you say it like that?
You just gotta say it. I mean, if you mean it, you gotta say it. If you mean it.
Well, mind you, I could still, even if I close the computer, I could still take trades from the phone. It ain't nothing to
Yeah, just
hop
block
in.
it.
I
have a great app that blocks applications like that.
On the phone?
Yeah.
What's it called? I might need that.
It's called because I use it for YouTube after a certain time because I will depth scroll for no damn reason.
Yeah.
So I got the app. Hold on, let me see.
Gameway, stop playing with me. Don't mock my.
It's called Screen Zen.
Screen what? Zen?
Screen Zen.
Okay.
I'm gonna show you the settings so you don't make no mistakes. I'm gonna send you the screenshot of the settings.
I'm up higher in Ethereum because it has bigger movement, price appreciation. But I feel like Solana's gonna be the long-term winner, maybe if they stay the course. And those are the only two. I mean, I already missed the boat. Missed the boat on Bitcoin. It's no sense in me even buying into that.
Yeah.
Bullish thesis on Solana is like around 500. I don't think it'll, I mean, I don't know. You never know, but they talk about 500 by year end. Maybe if they go on a stupid November, December bull run like crypto usually does, but I don't know.
Mm.
Let me look it up in the App Store. Screen Zen.
No, I'm gonna send it to you. You don't have to do no work. I'm sending it to you right now. Smith's inner demon's like, damn. It's like, damn.
He said, wait a minute. So you telling me you're gonna close down Tradeovate and trading in any application that can allow you to take a trade? Well, when you say it like that, no, I'm not. That is so funny. Yeah.
I don't think we getting a pullback, man.
Yeah.
This thing gonna just randomly pull back in the middle of the damn day. The Bulls ain't giving this up.
Like I said, I might be cooked. I haven't taken a trade, and it's about to be 10 o'clock.
Mm-hmm.
Maybe I can come back at like 1 o'clock to see something. But yeah, at least for right now, it's probably cooked. Let me turn. As a matter of fact, I'm deleting the open off my charts. I don't care what price you are anymore.
Not the revenge delete.
Yep. And it's gone. And it's gone. Yep. I appreciate you sending that. I'm downloading it right now. Stop.
Make sure you have it scheduled during the times where you don't need to be on your phone, like around bedtime. Have it to always strict, because a lot of these apps have it to where you can choose to give yourself a couple of cheat moments where it's like you get 5 minutes on the app, you can look at it for 5 minutes and then block again. I got mine to always restrict, so I don't ever get into the habit of, oh, let me just tap into thing. And over time, every time, if it's a habit, over time it'll break the habit. Now I don't even watch YouTube on my phone. I don't even look to, because I already know it's going to get blocked. So if I'm going to sit at my desk and watch YouTube, that's the only time that I'll give myself the leeway to watch it or whatever.
Yeah.
But not on my phone. I started reading after that. I mean, since I stopped watching YouTube on my phone, I started reading on my phone. So I like that response. During yesterday's stream, I don't know if he was here, but Tradeify sent me a book, ebook, and I read that whole thing yesterday because I couldn't watch YouTube. It's like, what? Or the day before. Yeah, so I just started reading.
Like, I blocked myself from social media and then I started reading. It's actually a really good thing, though. Oh man, yeah. I'm sorry. Not only I let myself down, let the people down. Call out a great trade, but I didn't take it. So
Regret, man. That stuff. That's the one thing, man. I'll take the loss, even though I don't want to take the loss. But man, regret just hurts even more because not only, I mean, you lost the opportunity and you doubted yourself. It's like a two-piece.
Well, like I said, I didn't want to place it and not be here to monitor it. I had to use the bathroom.
Mm-hmm. This man had to use the bathroom when Powell was about to get to the podium and speak.
And then even if I set a stop, it probably, like, say it didn't pop up. Say if we got a drop first before the pop, it probably would have ran through and pushed my stop lower, like how it did your target, pushing it higher. And I don't have time for that. Like that's a hurtful feeling when you put a specific area, you know exactly how much you're gonna lose, and then it pushes it down even further because of volatility. Like that's happened before, and that's just diabolical. So yeah, missed opportunity, but nah, I wasn't in on it. I would have had the perfect entry though, game weight. It would have been at VWAP. I talked about it. I said maybe I should set my limit there, but I didn't take it. And yeah. Market proceeds to push 300 points, and I'm left behind with nothing. But there's always next week. Because I don't think I'm going to catch anything. I don't think I'm going to catch anything, at least not right now.
Yeah, probably not. I'm in this short in the sim. I don't think it, like I said, I don't think it's going to work. It's just that I want to take a trade. That's why I'm in the sim.
Yeah.
I just want to trade. When you hear the, yeah, baby, yeah. Yeah.
Oh, it almost hit that. It came close to that stop. Or did you move that up?
Oh, no, it stopped me out the original position. I just re-entered short.
Oh, okay. All sim trades are perfect.
It's gonna work as in the sim. Yeah. Nah, gain weight. You're looking at it wrong. I'm trying to provide liquidity for your target. I'm trying to help you get to your target.
Yeah, it does need that liquidity to push up.
Mm-hmm.
So you're looking at it all wrong.
That's the power of perspective. You're looking at it all wrong. I'm trying to help you out.
Oh man. If this thing gets its second win though.
Yeah.
It pushes. Oh man.
Well, that means that you have to reset the breakout target, man. I mean, unfortunately, if you chase the original move, unfortunately, you could.
Oh, that's what
could get a loss.
I wanted to have. Dang, I missed the Think with Bookmap chat. I wanted to see what they what they were talking about on there.
Go short. Short
the scam. Yeah. Let me see if I can go back in the chat.
Yeah, they did him dirty like that. This man had over about 30,000, 40,000 subscribers. And killed his channel.
Yeah. It's kind of messed up. But then he started adding his charts and stuff, and I guess that kind of he put his charts on the side. And I guess that kind of saved it. Yeah, it is messed up. He was getting more and more popular, and then they killed the momentum.
Yeah.
And they kept banning his channel for like multiple times.
Yeah, and I thought that was like super weird. Because they wouldn't ban the other ones, but they specifically targeted his channel.
Right.
I think the other ones is probably wasn't it like ES Bookmap Live or something like that? I think they're actually maybe affiliated with Bookmap, I think. Maybe, I don't know.
Yeah, that's still messed up. 650, huh? Yeah, man. Mic drop. Look at this liquidity. Look at this wall right here, 650. They got their liquidity spread out in fives, every 5 points. You got a big or a decent batch of liquidity on, at least on the E-mini. 650, 655, 660, 65, 70, 75. Somebody playing games out there. Game weight, is that you? You spoofing?
It's always game weight.
Trying to spoof these orders. Oh man.
Yeah, I just don't know, man. I'm looking at this football. So this dude, trading in demand. He has a footprint chart only for the ES though. Not. I think there is a footprint chart for the Nasdaq and ES. I forgot what that stream was called. I think it was like called live trading or something like that. Order flow.
Yeah, I just never got into the footprints. I don't know how these dudes looking at that and analyzing that in real time, because it'd be moving so fast.
Yeah, cause his name is Order Flow Stream, and I mean I'm looking at it and I'm like, well, I mean, I guess I really don't know how to look at this. I really don't, cause it's like, well, I guess I don't know, man. I don't know. Because I feel like it doesn't tell you anything that you don't already know. It looks cute to have it on your chart and stuff. It makes you look smart and like, oh my god, that's so cool, footprint chart. Oh my god, I bet he gets all the trader bitches, but I don't know, man.
Yeah, man, I think this is gonna be a slow grind up. They're probably gonna try to get to 700, maybe 720. And if it's just a slow grind, he might even try to take it up near 8, but I don't know.
Yeah, I'm looking at probably like 7. I think I was looking at a potentially 775, 755. Yeah, 755, 775 for potential rejection as we trade back into that area, because this area was like a hot spot for like a really long time. And I can potentially see price trading into this area. If not today, probably. Y'all probably can't see that. If not today, probably sometime next week.
Oh yeah, yeah. I know what
Because
you're talking about. That 730 to 770 area, yeah. That that mess pissed me off so bad because when we were trying to break out of that, it just would not do it. And then I finally caught the breakout on it, but I didn't take advantage of it and get the piss out. I stayed in there thinking we were going higher. They made it to like 804 and then just dumped that thing.
Yeah. Oh, so you got caught up in them? You got caught up. That's where you got caught up at?
Yeah. Because I was in kind of high. And then I was in high originally thinking they were going to break out. I don't know why I keep thinking that they break out. It only happened like once or twice in the past, but I keep, I guess, reliving that. Oh, man, you missed it. They broke out of the highs. So I was in high, and then I kind of scaled down, and then it was just hovering in that area, trying to psych me out. And then we finally got that breakout later on, like it was like midday or something. I was in that trade, felt like for hours.
Yep. That's why, dude. I'm waiting for that breakout. I mean, it's you got to be psychologically and emotionally prepared for that, because if you don't wait for that breakout and you get aggressive with it, you know it's pulling back. You dude, the NQ is a siren. I mean, now that the price action is paid on the chart, just look at what she did. Like, she chopped everybody out. Like, she faked out long, she faked out short, she faked out long, she faked out short. And then finally that breakout, and she pulled back twice. And that's why it's like, doing the back testing, it's like, okay, yeah. I just got to wait for the breakout. And that confirms my bias, because what she pulled back to, she broke out at like 7:30ish. She pulled back to 7:30, and then she pulled back again right afterwards. So she gave 2 opportunities to catch this move down. Obviously, the second time was better than the first, but
yeah, that's usually how it is.
Yeah.
Yeah.
I just want the day to be over at this point. I'm kind of over today already.
I mean, you made your money. You're good. Caught your points.
Well, yes and no. I would have been really happy if I caught it in my copy trade account, but this is my throwaway account that I traded it in. So I made money, but it's in my throwaway account. I use that account overnight, taking trades that I just want to see what happens. It's like my gamble account, so it really doesn't matter. But I got the thrills, but it didn't add to any significant account. So
I see. Let's look at the orb today. Today's
I don't
orb.
think you want to look at it. I don't think you want to look at it.
It's too late. Yeah, I see. Damn.
It was clean, man. That was a clean orb breakout. I was super clean. That shit pushed. I think if you had your limits, oh yeah, never mind. You would have got filled at the orb, because that's where it stopped. So you can sell, like, even though we got that volatility push, it came back down, and you would have gotten filled if you had your limit literally at the orb. Hi.
Well, yeah, but I did miss out on the perfect entry. that VWAP limit. Make sure I don't have nothing sitting on here. Exit and cancel. All right, VWAP's sitting at like 400 something. I'm not gonna lie. Had I taken that, I would have been talking hella ish right now. Oh,
yeah,
man.
baby.
I told you.
Yeah. I get a move like that. I was like, "Hey, baby, I have to stop the stream a little early." Tell my girl, "Yeah, I gotta celebrate." Baby, you need to stop what you're doing. We gotta celebrate.
Yeah. Don't worry. I'll be quiet. But when I catch that move, I'll be talking again.
I'll be talking again. Hold on, guys. Hold on.
Oh, shoot. Yeah, I can't do nothing with this right now. I think I gotta close out. Just monitor everything from the phone. All right, Alfred. Monitor everything from the phone. Stay logged in the phone. That way, just in case anything happens, if I see a setup, I can catch it and then come back next week. Because the move happened already. Now we're just grinding, chopping around. I mean, we do have higher lows.
Slightest inconvenience, man. Slightest. All right, Alfred, everybody. Yeah, I got 15 more minutes in this stream. Like I said, I'm just about done. I'm just waiting until time runs out, and then time runs out for my work day, and I can just go into the weekend, and I got something to study. I think I may have found me a winning setup. Just doing a lot of back testing. Obviously, I'll share with you guys once I'm kind of confident in it. But what I was looking to discover is, how the market kind of reacts around like certain fib levels, how it reacts around certain structure. I already got the break and retest. That trade, it has been proven to work, and you're gonna lose, or I apologize. You're gonna win in that trade more than you lose, especially if you have a 1-to-2. That trade is always going to be a winner. This right here, under normal circumstances, would have been a winner right here. This is literally the break. Ooh, crap. My bad, guys. This right here is literally the break and retest trade right here. Literally, it's textbook. And it's crazy. I think that's probably why a lot of people got caught up in it, because it was just too damn perfect. This is literally a trade that you should look for. You got to break a structure, breaking a prior low right there, 2-legged pullback, and the bear should have came into this right here on the normal circumstances. Hey, dude, Mohammed, it has been a long time. What's up? I know this is probably we already know the answer to this question, but I'm pretty sure you caught that pump this morning. And I was able to catch that move on the ES. Smith, you still there?
Yeah, I'm here.
Muhammad said, "What's up, man?"
What's going on? I didn't catch it, so I'm a little sad about that, but it's all good.
Muhammad said, yes, I did. Of course I did. Of course I caught that.
Of course I caught that. Is that even a question?
Of course I caught it.
Oh, man. I'm good, man. I'm good. FX, what up, man? My bad, I didn't see you.
You got into the move pre-market? Yeah, yeah. I wanted to get that. So looking at the NASDAQ, we had almost a perfect entry at this trend line. It's just that I wasn't up to take advantage of it. If I saw the market tap at this trend line and push, if this happened probably earlier in the stream, like around 9 or 10 o'clock, I probably would have gotten and left a runner, because we was talking about this move all week. All week was talking about this move. And it happened. It just made sense to happen this way. And that's what I'm going to take away from this week, is that before the price action was even on the charts, we really analyzed the market. We talked about possibilities, and the possibility that we stuck with, you know, that's what happened this week. We stayed short, and then we was going to get a big move on Friday, and that's what's happening. And I think it's not what I think. It gives me the confidence to I'm not going to be overconfident, obviously, because we all know that you can't be over anything, but it just gives me the confidence to trust in my analysis, trust in my thesis. And when we talk about it and it works out, and y'all guys, you know, consider that in your market analysis, that just helps me with my goal. You said, so this is the NASDAQ right here. So this is the NASDAQ. And you said RTY. I think Alfred was talking about trading the RTY as well not too long ago. I don't know if he actually stuck with it, though. All right, so you said the RTY.
All right, yeah, guys, I'm gonna go ahead and get off here. There's nothing for me here in this. I missed the move. It happened.
Yeah, I would definitely just close out everything for today then.
Lock out
because
yeah, lock myself out for the day.
Yep.
Yeah.
Yeah, I got about 9 more minutes. All right, so this is the RTY. So what am I looking at? And he says, so that's the RTY. This is the NASDAQ.
But all right, y'all. I'll give you an update, Sherm, if I see anything or whatever, but I'm gonna go relax.
Okay. Yeah, honestly, you should do that. You should say, hey, what do you think about that? Because I'm not in an emotional state. You're going to be in an emotional state until the market closes. So I mean, you don't have to, but just to send me a text and and ask me what I think. And obviously, I'm going to give you a non-biased answer, unless that's why you're going to avoid it, because it's like, man, what if he says no?
Oh man.
Okay.
Yeah, but all right, y'all have a good one.
All right, man.
All right, peace.
You said you see the NQ job, but RTY didn't drop. Yeah, so you kind of use RTY as confluence, just because RTY didn't